Good afternoon, everyone, and welcome back. This is Daily Trend Analysis with a quick market update for today, January 17th. Well, today looks like we are ranging, we are chopping around, we open, we're trying to continue higher. Take a look at this 30-minute wedge that we had prior to the open. It looked quite nice to the upside after this breakout, but we got a sad and bad rejection. After not being able to cross 11,700, we started going down bear flag after bear flag, and after this consolidation, again a test of low day. And right now we are in the middle of the range. Actually, we are minus 0.06, so all barely flat. And you may be thinking why. So it is due to Goldman Sachs reporting its worst earnings miss in a decade as revenue falls while expectations rise. Look at this. They reported EPS of 332 versus 548. That's a big miss. Let's take a look to GS, Goldman Sachs. Let's take a look to this. Look at this. This is a 40% miss on the EPS. And missing also on revenue, both top and bottom miss. So this is showing that banks are not doing well, and where banks are not doing well, even though the interest rates are this high, a lot of people start feeling fear. And in this situation right now, currently, we are looking for things to go up and not continue lower. And this kind of fear means recession. A lot of investors and a lot of traders are calling out a big recession, and this kind of news don't help. Let's take a look to the charts and see XLF. This is the financial sector fund. We were looking nice for this higher low and break to the upside, but right now XLF is minus 0.72% in the red. Goldman Sachs is minus 8%. Look at this big red volume, all on 8% on miss. So this is quite concerning because this means recession fears. If we take a look to the Nasdaq, we were also at a nice spot for a big breakout. At this spot on 11,600, we previous support and now resistance right at this descending channel on the daily. So this was the spot in which we were waiting for big news, but recession fears from banks, miss on earnings are not a good start of the big earnings season that is coming up also in February. Remember that we started with the banks, and now in February we will continue with the big tech stocks. Apple, Microsoft, Tesla, Amazon, Google will be reporting earnings on February. And 2023 is all about valuation. We need these companies to report bad earnings, actually, in order for the economy to really cool down and show what Fed wants. They want earnings to be low, they want labor market, housing market, they want US consumer spending to start showing signs of cooling down, real cool down. Then we will be able to hold interest rates until hopefully at the end of the year they start supporting the economy again with a pivot, start cutting rates. Right now, I think the markets are in a mixed sentiment. Apple is in the green 0.50% due to the news that they are putting his flagship chip in the new MacBook that they are selling. So for Apple enthusiasts, those are good news. And apart from Tesla, that is actually continuing higher, fully pushing this pivot on the daily. looks like this is the only thing barely holding today, 5.60%. The rest, Amazon and Google, are both in the red. Consumer discretionary is actually barely in the green, 0.15%. And the ratio XLY XLP is flat. So mixed sentiment after CPI. We were waiting for good bank earnings, but we are not getting them. So right now we are holding. At least we are holding. We were at a good stop, at a good spot for a breakout, but right now we should wait. Hopefully it start a pullback. We hold 11,300. That's a key level. And then we start curling for the final breakout into, hopefully, this daily level. This big red candle needs to be retaken and for a push at 12,000, sorry. So what else is concerning? Well, crude oil is actually in the green. Remember, we had in the CPI a big decrease on energy inflation index, but shelter and services were actually up on the core inflation. So those means that we have sticky inflation on the core side, but thanks to the big pullback on energy, we were able to offset the increase in shelter and services. But what will happen when crude oil starts pushing up? We don't want to see that because there will be no more offsetting of energy if CPI continues higher in shelter and services. So we will be end up having in February, January CPI higher than before. And that would be quite really bad. So we want energy to pull back and to hold low levels in order for CPI to continue lower, and hopefully core CPI starts also cooling down. Dollar it's holding this big trend line, sending support, and I think at 101 or even 100 it's a good spot for dollar to hold ahead of earnings. Remember, dollar plays a big role in earnings in the stocks and companies that trade overseas. So having dollar down here is good for this Q1 earnings season. Yields are not pushing down or up, are barely consolidating. But remember, we need yields to stay continuing lower in order for the Feds to be able to pivot later in the year. If something starts to push either energy or earnings are better than expected, I think markets will try to price in higher interest rates and think Fed will increase maybe 25 points or even 50 in the next month in February. So yields are waiting for those data and for those earnings in order to take a decision if they continue lower or if they correct and we reach again higher levels. At April this year, we are still pricing in 4.8. Fed says that we will be hitting 5. So there's a big gap that will be seen, maybe filled, a push higher if earnings are good. So watch out. 2023 is all about valuation, and this Q1 earnings season is going to be key. Let's go back to the Nasdaq and take the final look for the day. I think Nasdaq is going to be ranging until the close, and hopefully tomorrow we have economic data. We have PPI, retail sales, and industrial production. So we want PPI actually to be negative and core PPI to have a 0.1 increase from 0.4 to 0.1. That would be great, and also retail sales continuing lower. That will show us that consumer spending is going lower. But be careful. Fed Bostic is talking at 9, and also Bullard is talking at open. So after PPI, don't be too confident because these two Feds can move the market heavily. Wait for your opportunity and take this economic data and also the speeches into account. And I think that's all from my side. Thank you for your time as always. If you found this video useful, please remember to click the bell button and subscribe to the channel to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time, and remember, the trading day is not over yet. Discipline and risk management are key for success. Stay safe, everyone.